Once again we are back, and we are back with more content. So today I'm going to teach you one strategy that you can use when you're using the higher time frames, and also you can use this on the lower time frames. Okay, so let's get going. So today I will tell you how you can trade using the moving average and the awesome oscillator using the crossover strategy. Let's get going. Let's start. So this is your moving average right here. So how many moving averages would I recommend? I would recommend you to use 3 moving averages. One, use a higher moving average, for example 100 period, use a 50 period, and you can use a 25 period, or you can go with a 75 period, 45 period, and a 15 period moving average. Again, you must have a bit of a fundamental analysis where you plot lines of support and resistance. Then you have your awesome oscillator right here. So let's see. Now the crossover strategy dictates that the market, when the market goes beyond zero level from the upside, then it comes down, bypasses the zero level, it dictates a sell entry. But this is not always the crossover strategy. Again, nothing is 100% sure perfect in forex trading, but at least we always find use of indicators and certain strategies a bit giving us better probabilities of winning. So looking at the awesome oscillator, now you can see, like, from this level it was coming up, it bypassed the zero level, giving us a buy entry, so we went up. But so how can you combine the moving averages and the awesome oscillator? So this is how you combine the moving average and the awesome oscillator. So number one thing about the moving averages is that for you to identify that the market, for example, is bullish or bearish, first identify how the lower time frame the lower moving average is operating. For example, the 25 moving average here, it came up, now it started now intercepting these candlesticks, okay, and then the second one, which is the 50 period, followed. So at some point I knew that the highest moving average, the highest period moving average, that is the 100 period moving average, would finally intercept that. So what would that give me? A good entry. For example, look at here, this was a good sell entry, whereby I would have taken a sell trade here, and you see it would have taken me up to this level. But of course, the moment you see when you observe, like for example this 25 period moving average, you would identify that it was intercepting and then acting as a resistance, intercepting again, acting as a support, intercepting, acting as a resistance severally. So the same thing applied to this one. This one acted as a resistance here, a support here, and then it came and acted as a support again, and then intercepted finally. So that's what you expect even this one to do. It intercepts. So the point of interception gives you a sell entry, so that you can sell your market. So when you sell your market, and again the awesome oscillator also gave you a signal, okay, so that was a good sell entry. Again, you can see this market came here and tried to consolidate on this level, and then came here so that it would finally come down out of this level. So come again, and you can see that our moving average right here, it formed a saucer here. So this saucer, and then came here, and then crossed over. So perhaps this one would not have given us, this one would not have given us a good entry, a good long entry. And what you are trying to do here, you are trying to use to try to get into long market entries. So one good market entry was this one. You see, the moment it intercepted from here, it gave us a good long entry. So this strategy works well on a ranging market. It does well on a ranging market. A ranging market means that a market is playing on a level, is moving between a given level of support and resistance. For example, this from this point here, this market was arranging, this market is on a ranging move because it is not going beyond this point, it's not going beyond this point or this level here. So you can, that's how you can use your moving average to you know, to determine long long entries. Let's look at another one. So, and again, not every, you know, every entry is going to be a long entry, so you might also find yourself making you know, mistakes all along. So this one was a good entry, you could have taken it from there, it would have taken you up to this level, okay, until you found. Now when you find this type of market candlestick formations whereby they are aligning themselves on a certain level, that one gives you two ideas. Either that market is going to break down or reverse, and the moment you start seeing this reversal candlestick, you can now close your market so that it does not now start, you know, taking away your profits. Now then when you come at this level, you would see that this one was a bit better, it came up to this level and now started forming these candlesticks. Okay, let's take a look at another one. This is a bullish one, so it would have taken you up to that level, it would have taken you to that level right there. Okay, again, if you would have taken that entry from this level, you know, and then it would have also, you know, take up you up to that level. Okay, then, you know, all these pullbacks here would have given you a signal of maybe that market would come down. So again, you have to be very keen when you're using these strategies, because you are trying to target long, you know, long trades. So what you need to do is sometimes you have to take reasonable profits. Not always the market is going to, you know, go long. If it's going down, go down long, and if it's going up, go up long. So the secret behind, you know, being profitable in this strategy is taking reasonable profits. Don't over expect. Sometimes it's good, even if maybe the market just went down, sometimes it's better. But again, you can apply the RSI. For example, the RSI here told us that the market was oversold, so this one gave us a very good signal, and you see there was a selling candlesticks that maybe that confirmed there that the market was to come down. Again, it came to this level. You see, you can also combine with the RSI. Now you see that now this one would have given us a good run there, and this one you see it would also give us a good run there. Then the RSI would dictate that the market was overbought. Again, you could have, you know, taken after these you see this reversal candlestick, you could have, you know, taken a sell trade there, and then even come here, and then again confirm. This marketing, this strategy is even more profitable, because you could even have come here again, continue taking a sell trade, because you could have taken this as a crossover to the downward side, and then it came down here, formed these candlesticks, you know, try to show some signs of pulling back, then crossover strategy comes upwards. Okay, and you can see, as you can see, the moment the moving average intercepts with these candlesticks as the market is moving up, and you can see the awesome oscillator again, you know, it's crossing over, so you can take your buy trade there, and you see you enjoy all that, you know, profit. So that's all for today, guys. Hope my channel is enlightening you, so don't cease to share this content, like, subscribe, and hit that notification bell. Till next time, have a lovely time.